WTI crude trading at its highest level since early November. Over the weekend, Saudi Arabia, Russia, and other OPEC plus producers announced that they're going to extend voluntary crude production cuts till the end of the second quarter. Joining us now for what this means for the overall oil market, Helima Croft, Global Head of Commodity Strategy and Managing Director at RBC Capital Markets. First of all, good to see you, Helima. But first of all, anybody cheating? Do you believe that some less than others, or do you believe that they're going to follow through with what they said?
I think the most important thing we think about OPEC is that they look more unified. And the most important producer, Saudi Arabia, is going to continue with its million barrel a day unilateral cut, the lollipop. And the rest of the group may not be quite as perfect as Saudi Arabia, but it's not an atrocious situation when it comes to compliance. Like, we're not facing a situation where there is extreme cheating like in years past. So some are better than others, but the group seems to be better together. And Saudi Arabia looks continue to be balancing this market.
It just seems, Helima, that if I were to tell an oil watcher a year ago that, you know, the Ukraine war would be dragging on, but you're going to add in, you know, all the conflict in the Middle East with the Houthis and you know, the U.S. economy is not going to go into a recession. In fact, it's going to look like it's upticking. It just seems like all those factors would have us maybe at 100, and we're not. And I don't, and you know, the cuts and everything else. Can you explain it to me?
I think, look, Joe, there had been this sense with the Russia-Ukraine war that would be seeing a significant disruption. Remember, we talked about 3 million barrels a day potentially coming off the market, and then that did not materialize. So I think you have a lot of market participants who are looking at this war in the Middle East saying, yes, we have tankers that are being diverted. You know, we had one that was sunk over the weekend, but by and large, oil is still making it to the market. And so they're still in this show me situation. They want to see a physical disruption. And then you had really strong U.S. production growth last year that surprised the upside. That said, I was just in London for IE week, and there is more optimism now. People are looking at the physical market and saying it's looking tighter. There is this sense that the U.S. is not going to be 1 million barrels again in terms of growth. It'll be sub 500,000. And so I do think sentiment is starting to turn. But again, we're not seeing yet the runaway path to 100.
What about China? Helima, does that answer it a little? Is the, in terms of demand, is it down in China year over year?
No, I mean, Joe, I think this was a situation where everyone thought it was going to be a grand reopening for China last year. And Chinese, you know, there was growth, but it wasn't as spectacular. And I do think if we look at import data for China, it remains, you know, it's constructive. It's not blockbuster, but there's a divergence between this sort of China macro worry and what we're seeing on the oil side. But again, coming back from London, coming back from Saudi Arabia the week before, I think there is sort of green shoots of optimism about the oil market. I don't see it nearly caught up in such bearish sentiment as it was, you know, even a couple months ago.
So we're going to test, I mean, we're almost 80. We're going to just head back down to the trading range we've been in, 70 to 80, or do you see it 80 to 90 maybe?
I mean, we have 85 for Brent in the back half of the year. What I think is going to be important to watch, Joe, when you think about next catalyst is, I do want to really see what happens in the Middle East. The Biden administration is working so hard to get a ceasefire before the start of Ramadan. Real questions about, will this war potentially expand to Lebanon? And Iranians have signaled that if it becomes an Israeli invasion of Lebanon, that is their red line. And so I do think we can't write off Middle East supply disruption risk yet.
In U.S. production, what you said that why would it not continue at $79? Why wouldn't everything stay open?
Well, I mean, again, it's not that we're saying, Joe, that U.S. production is not going to grow. It's just a question about, you know, were the gains that we saw last year due to particular, you know, unique circumstances that are not going to be replicated this year. Again, there is a view that you're going to have more modest U.S. growth. Now, if we got something that surprised the upside, again, I mean, last year did surprise the upside. Everyone had talked about capital discipline, that we weren't going to see 13 million barrels a day again. And look what we saw last year, along with strong growth out of Brazil, Guyana, and Canada. So again, I think people are saying the U.S. is going to grow, but we're not going to get caught by surprise like we did last year with a banner U.S. year.
All right. And finally, We've got one guy running who said, I'm going to shut down the fossil fuel industry. We got another guy running for president that like says, drill, baby, drill, and, you know, constantly. So, but then again, if the price is high enough, producers are going to produce. They're going to do what they're going to do. Does it matter who's sitting in that in the White House next year?
I mean, certainly I think it matters rhetorically. I think certainly if we saw what happened with U.S. LNG exports, you could say that potentially the Republican administration would not have taken that type of pause. But at the end of the day, you're right. The Biden administration came in and said they were going to keep it in the ground. But yet when they got caught with higher oil prices and an energy crisis, potentially, they were like, put the money in the ground. So at the end of the day, the Biden administration had encouraged U.S. production. They had released from the SPR because they were facing an energy crisis. Interesting to see if there's any change on Iran policy, because you do have people around President Trump saying they would take a much tougher line on Iran and reimpose significant energy sanctions.
You got a good beat. You're London, Vienna,
Saudi Arabia.
Well, that can be, I don't know, maybe not for everybody.
Yeah.
Oh, you like it?
I like
okay,
going.
good. Okay.
Yes.
Okay. All right. I think it's a cool beat. That was smart.